Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Monday. In today's program, I want to discuss the complete decline of the great British pound and what could potentially happen next. Plus a little bit of a developments for the Eurozone as well. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. With that out of the way, let's try that again. With that out of the way, let's get started. So basically, in a nutshell, carrying on from Friday's massacre, the sterling has crashed, or it crashes to an all-time low. I'm not talking about a 37-year low. I'm not talking about a 40-year low. I'm talking about an all-time low against the greenback, against the US dollar, an all-time low. In fact, okay, though it has recovered slightly now, it actually in the Asian session, it fell below the 1.04 handle for the first time. So all-time low. I can't get my head around that. And like I say, I've been a sterling bear for quite a while. And those good people who watch my videos, then whenever I talk about the cable or the British pound US dollar, you know I've been a bear on this pair. But what amazes me and what I'm really gobsmacked about is how quickly the sterling has collapsed against the dollar and also against the euro as well. How quickly this has happened. Expecting a decline. Now we've talked about this for several trading sessions, but it's the speed of decline which is amazing, and we all know why this is. Okay, yes, the sterling's been under a lot of pressure for a very long time due to obviously inflation being at 40-year high at 9.9%. The Bank of England being a little bit tepid with its interest rate hikes. Economic slowdown, clear signs of economic slowdown. And obviously a very, 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 very strong dollar. But like I said on Friday with my little rant about it then, what's really pushed it over the edge is these insane tax cuts, being put in by the new Tory government, which basically says to the market that the UK is not going to be able to afford it. They can't afford to do it. We're already in debt as it is, so borrowing costs are going to skyrocket because of it. So this is what's really spooked the market, and it didn't help over the weekend with the new Chancellor, being a total rocket scientist that he is, saying that he's going to do more cuts, and he wants the British public to get them out of the mess, by having the tax cuts and spending money. So that hasn't helped at all. So, and like you said on Friday, the markets would do what the markets would do, and he should have really thought about it. But anyway, as well as that, on the back of this, we've got, it's not just the sterling, UK gilt yields, their bonds, UK bonds, they're at the highest level since 2010. So obviously the question going on, because obviously we hit an all-time low in the Asian session. Like I say, yes, we have recovered since. It still remains under pressure. Will this bloodbath continue? Will it continue? And that's the big question, because now what the market, because of like I say, there's such a rapid decline, and it's all in the headlines at the moment. It's totally dominating everything. The sterling collapse. There is talk on the street, so to speak. There is talk, and again, I want to have a conversation about this, of the Bank of England intervening, because, like I say, because it's not just a decline. If it was a slow, steady decline, then I guess the market wouldn't be in such a panic. But because it's been so quick and it's been so dramatic, there is cause for the Bank of England to jump in. Bank of England to jump in to do something, to try and rescue sterling or support it. And the one thing they could do, of course, is do an emergency jumbo rate hike. Call an emergency meeting this week and jump in and do a emergency rate hike, and just go straight in. raise it to give it a bit of support. Because don't forget, the sterling, with sterling being weak against the dollar, okay, it's going to cost a lot more for the UK to bring in certain commodities, because commodities are priced in dollars. Oil, gas is priced in dollars. So if you've got a lower sterling, then obviously it's going to make it more expensive to bring in energies. And we're facing an energy crisis as it is in the UK. So this is a big thing. They've got to do this. As well as that, with all parts, the UK is an island, so they import a lot of goods. So obviously it's weak against the euro, it costs more again. If it's weak against the dollar, it's going to cost more again. So we already got record high inflation as it is. Something needs to be done. And there's an interesting point I want to make. Obviously there is a lot of concern with high interest rates. It's going to hurt mortgage owners and push the UK more quickly into a recession. Okay, into a recession. But here's the thing: that's going to happen anyway. We're going to go into the UK is going to go into a recession anyway. It's going to happen anyway. And we all know that 2023 is going to be a very tough year for the UK. So no matter what you do, if that's the outcome anyway. There's no coming back from that. So, they've got to, throw caution to the wind, and they've got to intervene. They have to be aggressive and have to increase interest rates. I mean, it's either that or the government, or this new government, does a slight change of plan, changes rhetoric a bit, starts being so aggressive with it, So, those are the two things which really need to be done. So the Bank of England needs to either to intervene dramatically this week with a jumbo rate hike now, not till later, but now, or they start being aggressive with their talk, far more hawkish, saying that, like the BOJ did a little bit, look how that sort of panned out, do that a bit, or the government changes its stance. I mean, traders are pricing in now, because of this, 150 basic point rate hike by November. They are pricing it in, but like I say, many people in the market now are feeling they have to do something now, not wait to November, not wait for November. Do something maybe this week. Because say Barclays, they predict if there is no intervention, then the British pound US dollar could fall to parity. Now, we know we've had the euro hit to parity, but that was always on the cards. But the idea of the sterling falling to parity against the US dollar, it was unheard of months ago. But now, like I say, this is very much a possibility. Up next to the UK, of course, which is important this week, which is going to be another major thing for the market to be aware of course, is the UK gross domestic product, due on Friday at 6 a.m. UTC. Expectation is for it to come in negative 0.1%. Previous record was, negative as well. But like I said, let's have a quick look at the sterling now against the dollar and against the greenback. And like I said, these are unprecedented levels. Okay, like I say, it went under the 104 handle. It's since recovered, and it's currently trading on 1.0771. So it has recovered. Now, doing pivot points, okay, I can see a potential first support around 1.069772, and secondary support, again using pivot points, around 1.055096. Resistance wise, for it to get any way back, and I can't see it getting close to this level at the moment. Any of the balls back would be 1.11323. Again, this is using pivot points. So like I say, this is unprecedented at the moment. It's like I say, if he's doing a slightly there, we can see those levels a little bit more clearly. That's the first key potential support, followed by 1.05536. So again, these are using the pivots. If you look at the euro sterling, okay, again with 30 minutes, as you can see, it actually did go above 90, way above 90. It's trading at 90 at the moment. In fact, if you look on a daily, we can really see a clear picture of this, where it is. Actually went above 1.09215. So this is the euro sterling. So as you can see, the question is, of course, will the euro get to parity against the sterling? We're not far off from that now. It is possible. It is a possibility in the long term. But yeah, this is the story. It's a really it is a bit of a mess It really is. If we ever look at the FTSE as well, okay, on a daily, obviously had a very bad day on Friday, has recovered slightly, 7,009 points at the moment. So yeah, in general, the UK is in a mess at the moment. Right, in other news, which again, this is pretty major. This is big stuff, but it's been overshadowed and outstaged by what's happening in the UK. Totally outstaged by what's happening in the UK. And that is, of course, Giorgia Meloni has become Italy's very first female prime minister today. Very first, Italy's very first female prime minister. But what is an interesting thing about this is, and this is why really the market should talk about it, but again, it's been so overshadowed by what's happening in the UK, is that she's actually the first far-right leader Italy has had since World War II. First far-right leader since World War II. Now, I mentioned a little bit about this on Friday, and so there was a little bit of concerns in the market that because of her party's ideologically, her party's ideas and beliefs, it could cause friction between Italy and the rest of the Eurozone. Don't forget, Italy's a very big receiver of obviously the COVID protection fund, additional funds to help people recover from COVID, and they're one of the biggest receivers of this capital, and they have to do a number of conditions to get this money, and they need this money. So there is obviously chat about this causing friction, things of this nature, and something else which hit a new low as well. And this was a little bit because of this, but like I say, this has been overshadowed purely by the sterling's decline. It was with the euro actually fell to a new 20-year low before recovering as well. But let's have a quick look at the euro. I mean, I think this story, it's going to be interesting. Like I say, it's overshadowed totally by the sterling today, which is probably not a bad thing for Italy at the moment, or for the euro. But I think this could be an interesting story to see how this develops in the future. But anyway, let's have a quick look at the market and at the euro in particular. Okay, so here we go. Here's the euro. Like I say, it actually touched a new 20-year low before recovering. It's currently trading now at 0.9688. Don't forget, there is many analysts, ING being one of them, are predicting that in the long term, especially as the energy crisis gets worse and worse and it develops more, and like I say, it doesn't get overshadowed by the sterling, it could fall all the way to 0.95. It's just traded just above that, so it hasn't quite reached that yet. So it has touched that. I mean, for it to get any bullish momentum, we're miles away now. We have to get around above 0.98830 is the area of interest I'm keeping an eye on at the moment for it to start getting a little bit of momentum again back to the upside. But yeah, that's the levels of the euro. If we have a look at the euro yen as well, again didn't favor very well. Obviously, over the last couple of sessions, didn't hit an all-time low against the yen, obviously, but currently trading at 139.26. If we look at other things as well, have a quick look at gold, because gold has come under pressure once again, mainly down to a strong US dollar, obviously a strong greenback, which we're all experiencing. Currently trading at $1,645.49. Key area of interest for me, $1,667.86. And finally, if we look at the dollar yen, as you can see, the dust has totally settled now on the back of obviously the Bank of Japan's intervention last week. Currently trading at 143 again, 75. I can see, obviously, we all know that the level which the BOJ have given the game away now. They've told us what level they're willing to let it go to before they intervene. It's 145, so that's obviously going to be the next sort of test. At the moment, we're capped around 140, 144 psychological level. But I can see the way I see it. Okay, obviously with BOJ intervention, I can see this pair trading fairly sideways as well. Yes, a question. Is there going to be a steady month? Everything seems to happen. I don't know. It's a good question. It's a good point. I don't think so. Not at the moment. Everything seems to be happening at once. And I've never known quite a couple of weeks like this or a couple of months like this, because it's been non-stop. But yeah, that's a very good point. But yeah, Bitcoin. Okay, it's certainly favoring a lot better than sterling. Sort of trading between $20,355 and that key support I've been watching for a while now, $18,438 as well. I'm interested because I say I'm going to be interested in keeping an eye on Bitcoin in the coming because it is a risk asset. Okay, so we have, it does suffer when it's risk off. But one thing which is interesting to me slightly about this, and I'll keep an eye on it, with all the other major currencies, the yen under dollar pressure, the sterling, as we know, under dollar pressure, euro under huge pressure. It'd be interesting to see how Bitcoin maybe starts attracting alternative investors looking to get, another source of moving their money. So it'd be interesting to keep an eye on how that, especially as we got, say, the sterling and the euro on the back foot. Okie dokie. As the market currently stands, the FTSE slightly in the green, just by 0.02%. DAX currently trading negative 0.04%. And Euro Stock 50 currently trading in the green, 0.30%. Major events to come this week. Obviously, we got Lagarde speaking several times this week. Be interesting to see what she has to say about the future of rate hikes for the Euro ECB. US durable goods, Germany CPI, US GDP, like I said, UK GDP, which I think is going to be fascinating, and EU CPI. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Or share with me your opinions. What do you think? I mean, how low do you think the sterling could go? Could we go to parity against the dollar? Could it go to parity against the dollar? Or could we see a recovery from here, some dip buying from here? Which one? I'm expecting to see a little bit of dip buying, to be honest. But I really do think, unless the Bank of England does intervene, or if the government, the UK government, changes their stance, then I think we're going to see more and more pressure on the sterling, indeed. And like I say, we're back above 90 again, way above 9 against the euro as well. Euro was 0.90015. So yeah. I'll be doing the watch. I can't do. I love to do the UK GDP. I really would, but it's at 6 a.m. UTC. So it'd be difficult for me to do it at that time, unfortunately. So I will be doing the US GDP watch along this week instead, because that's going to be on Thursday at 12:30 p.m. UTC, which is be better time for me to be able to cover that. I would love to cover. Hey, good morning, buddy. How you doing? Really good to see you, Joanne. How are you? Good morning to you. Good morning to you. Yeah, so it would be the US GDP. I will do. How are you, bud? How are you, my friend? You good? What do you think about what do you think about the sterling? What's your opinions on the sterling? I mean, we talked about this. We have talked about this, haven't we? We've always been bearish on the sterling, but like I say, it's how quickly it's declined, which is surprised me. It really has. But yeah, I mean, don't forget the euro is going to be interesting in the coming sessions as well, because okay, yes, the limelight's been stolen by oh wow, man, sterling totally wow, unbelievable. It really, I mean, I've always been a sterling bear. I have been for a long time, but it's the speed, like I say, it's the speed of its decline, which is, it's shocking me. And yeah, there's always great. I mean, the amount of volatility in the market now at the moment, there is a lot of great trading opportunities. We act with caution, though, as I always say. Trade safe. You've got to act with caution, because this market at the moment, and I can't quite remember a market like this. Obviously, we've had volatile times. I mean, the sterling's decline is almost like a black swan event, the way I see it. That sort of movement, it's really shocking. But yeah, it's very exciting times, but it's also times for caution. So be cautious, very much so, because we don't know what's going to happen next. Like we did with the Bank of Japan last week. When they suddenly intervened and cut the market out. They suddenly intervened. So anything realistically could happen at the moment. So by all means, lots of opportunities, but be safe, be careful, be careful. Great to see you again, though, boy. Great to hear from you. Is there any other questions at all? Any other things people want to ask or share their opinions on? Okay, not a problem. Don't forget, if you think of a question later, okay, if you think of a question later, here's a question. It would be interesting to see if this week the BOE intervenes and how our market will react and if it lasts long or not. It'd be really interesting. I mean, I think there's pressure on them now to intervene. How they're going to intervene? I mean, I don't think they would do what the BOJ did and enter the FX market. I don't think they would do that because that's the BOJ, but they might. There's two things they could potentially do. Call an emergency meeting, okay? Call an emergency meeting and go, right, we got to do an interest rate hike now, okay? Or we got to do it, or hint they're going to do it really soon. And we've got to be aggressive, do 100 or do 150 in one go, like that. Either do that or talk about it and stop being more aggressive and hawkish in their comments and their rhetoric. That's the one things they can do. That's the two things they can do. And it would be interesting to see. There's pressure on them. And like I said, there's no time for caution now. I know we're all worried it's going to push the UK into recession, but there's no going back from that. We ain't stopping that. That's happening. So, yeah, the difference is, could it make it potentially worse? Might be a good thing. But like I say, last week we did a watch along on the Bank of England, and and I couldn't believe myself saying this, but they did a 50 basic point rate hike, and that, in my mind's eye, was dovish, and I can't believe I'm saying that a 50 basic point rate hike is dovish now. But these are the times we live in. 50 is dovish. I can't believe I'm saying that. But like I say, the times are really, really, really strange. But like I was going to say, if you think of a question later, you can put it in the comment section, either on Facebook or YouTube. I will see them, and I will reply to them next time I go live on air. So do bear that in mind. If there is no questions, no other questions or no other comments, not a problem. Big shout out again in that case to SMF 790. Johan, my friend, it's great to see you. Really good to hear from you again. Really good to see you, buddy. I hope you and your family are both well. But don't forget, of course, I'll be back online again later today at 2 p.m. UTC to cover the US session and any further developments on this sterling story, and obviously any other market developments as well occurring as well. So don't forget that. This is one more question. I think the BOE agreed to do 100, 150, and it's just a sack chancellor, and that might help the sterling. I don't think that's going to happen. But the BOE made 100 and 150. That could be potentially on the cards. I don't think trust is going to do anything. But 100 or 150, yes, that could potentially be on the cards. 100 would be aggressive. They could come in and do 100 and do an emergency one. But again, that has a flip side, because that also says they're panicking. So the markets may react slightly negative, thinking they're panicking. But like I say, there's no time for caution now. There is no time for caution. That's a good point. But anyway, like I said, don't forget, I'm back online again later today at 2 p.m. UTC. So please come and join me for that. I'll be talking about the US session and covering what's happening in the market from now onwards. Anyway, like I always say, if you're watching me on Facebook, by all means, give us a follow. If you're watching me on YouTube and you've liked it, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little video and found it interesting and useful, and you put up with me, my over-the-top enthusiasm for the markets, I simply cannot help. Then give me one of those. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.